Hey everybody, it's Brad Decater with the Decater Real Estate Group, coming at you again with a monthly market update. Today we're looking at February. This is all the stats for just King County, Washington. Alright, let's jump right in. So first stat we have is new listings. So this is just the amount of new listings that came to the market in the month of February, and we are up 52% from January numbers. So that's a massive number, pretty huge. But before you get too crazy, it's actually quite normal and actually trends with most months in February compared to January. January is typically a very low inventory month for new listings to come out just because it just got done with holidays. Things are starting to ramp up for buyer demand typically in the month of January. But as we start heading to springtime, we are going to see more and more inventory. So it's likely that we are going to have that 40, 50, 60% jump here in February, and we're going to continue to see the jump in inventory as we lead into peak season of inventory, which is going to be in the summer. And just to put that stat in perspective, we had just about the same amount. It's a couple hundred different. And so just to put that into perspective for you, if you look at last February, 2021, and also the February in 2020, both those months were almost the exact same, very, very small amount of differences between the active new listings we had in this year of February. So again, 52% increase, it's massive, I know, but about the same as we had the last couple of years, so nothing kind of glaring right there, just very normal. So this is really just a normal seasonality type thing. We're gonna get more inventory as we go into spring, so nothing to worry about there. So pending listings, as you would imagine, kind of goes in line with how many new listings we had because everyone knows it's such a competitive market out here. Most listings are getting sold. So pending wise, we are up 48% from January. But again, this number is looking about the same as it did from last February and the February before that. So looking at a yearly trend, we're still sitting in the same kind of general area as we were the last couple of years when it comes to new listings and pending listings in just the month of February. All right, so sold properties, we are up 13%. And that's a lot lower than, of course, the 40 and 50% for pendings and actives. But if you've watched my videos before, you know sold statistics don't tell the whole story because the sold data is actually from the month before when they went pending. So solds this February were actually ones that were listed and went in contract in January. So it's a lag metric. It's basically not accurate for what's actually happening today, except for the sales price, which we'll get into next. All right, so here's some crazy stats for you guys. If you watched my January update, you will remember that I talked about how I predicted February was going to be pretty crazy because as we were making offers and being in our local market as we are, I noticed how crazy and competitive it was in January and February. So now that the February statistics are out, now that we're in March, I'm able to see what I predicted, which is that we had some massive appreciation numbers. The market is super competitive. So the average sales price in King County went up 8.5% in 1 month. So from January to February, we went up 8%, which is crazy, which again is what I predicted because the January statistics that came out, again, they're a lag measure for sold prices. That's the ones that were listed in December. And we had a whole different type of demand here in January and February of this year. So I knew that the lag statistic of sold price was going to be a huge inflated number in February, and that turns out to be correct, about 8.5%. And that's just in 1 month of sold data. Crazy. So in real time, if you had $1 million property and you went pending or you sold it in January versus selling it in February, we're talking about $85,000 of net profit there. With that appreciation number. It's a big, big number. Now, when you look back at historical data from the years before, we are actually up about 19% from last February. So that's another massive number. You guys have seen my videos before. You know that we're in a crazy appreciating market. When I did my year over year video, it was about 16.5%. This February was so crazy though. Year over year right now, about 20% in King County appreciation. Massive number. If you're at $1 million, that is $200,000. That's how much appreciation 20% is in a real average house price point in this area. So another crazy statistic that I want to share with you is also one that I referenced in my January video. I was also predicting this was going to change. So list to sale price ratio is a stat that we look at pretty regularly. For quite some time now, it's been over 100%. So 102%, 103%, meaning that a house that's listed is on average going to be selling for 2 or 3% more than the list price. So we've known this for quite a while. It's been, I guess, hovering around the 4, 5, and 6% above list price for quite some time. We did hit 8% at one point last year when it was super competitive. Month of February stats are out, 111%. So at 111%, that's the average. So the average house that is listed is selling for 11% more than they listed it for these February numbers. So again, for perspective, if you listed at $1 million, on average, it's selling for 1.1 million, just a little bit over that. In fact, the data is finally catching up to what we've been actually seeing and knowing in the market, and that is that, man, it is competitive out there. It's crazy. There's bidding wars on most properties, and 10, 11% is the average. So that's, some properties get listed too high. They actually sell below listing price. So when you take out the outliers, I mean, there's those properties, and then there's houses that are listed at $1 million that are selling for 1.3, 30%. It's just crazy. But on average, just over 10%, 11% list to sale price ratio, which is a crazy statistic. All right, so that's all the stats I have for you guys. So I'd like to finish up with kind of what I'm projecting for the rest of the spring and the rest of the year. So what I'm predicting is that it is going to still be a strong appreciating market. I know there's a lot of fear in the market. There's a lot of stuff going on. The war stuff too can affect things. The Fed's going to make their announcement soon, so it is definitely a time frame where it's kind of hard to predict what's going to happen. But because of all the factors that I've gone over in all my other videos, which is supply and demand, there's not enough houses being built, there's not enough listings coming out, there's tons and tons of buyer demand. Even with the interest rates that have gone way high in the last couple months, it has not deflected the demand at all. It's crazier than ever right now. So that factor isn't having as big of an impact as it typically does, which is what I've predicted in the past as well, that with interest rates rising, with our demand and the rest of the economics of real estate, that I didn't think that it would have a huge impact, and that turns out to be correct so far. If rates go to 5% in a month, that of course can have an impact as well, and I think that it probably would, although I don't expect that to happen. With the Fed's announcement here coming up, it'll be interesting to see, because the mortgage rates have been kind of baking in them making their federal fund rate hike this coming week here. And for many, we've expected either 0.25 or probably a 0.5 rate hike from the Fed, but that's kind of baked into the mortgages right now. So the question really is going to be, okay, is this new news with Ukraine and stuff and the war happening and the potential war, is that going to impact things for what the Fed actually announces? Because a lot of times when there's fear and uncertainty, they kind of want to step off the gas, pump the brakes a little bit to kind of see what that's going to cause implication-wise for the economy, and that might impact their decisions. So that will be really interesting to see what they talk about there. I will do another video based on what they announce. But interest rates, I think, are going to stay pretty level right now, and they may even correct, possibly, and go down a little bit. We'll see what happens. Too hard to predict that right now, honestly. But whatever happens with the interest rates, I think that the rest of the factors, basically the supply and demand factor, being that there's tons of demand, tons of buyers, and very low inventory, I think kind of tells the story, which is why I'm still predicting an appreciating market. Now, that being said, even though that is what I expect, I do expect a slowdown. This amount of appreciation, 10% a month, well, of course, is not sustainable. If that happened every month, we would be doubling our housing prices every year. 10% a month would be, 100% in a year. So that absolutely is not sustainable. I don't expect that we see 10% every month. That's crazy. So I do expect things to cool off a little bit. This is probably the most competitive that I've ever seen it in my career, and it's been competitive for quite some time now. So now that we are heading into the springtime, we are going to see more inventory, and with the interest rates and all those other factors, I think it's just going to be a little bit less competitive than it has been the last month or so. But as we lead into spring, we're still not at peak inventory right now. It's still climbing. So next month we'll get more inventory, still high demand, a little bit more after that. And then as we get towards the middle of spring and towards summertime, I think that we will see a slowdown just because of what's going on is not sustainable. So I think prices will continue to go up for a little bit, and then they basically have to level off at some point. And I expect that in the next couple of years they still will kind of go up, but they won't go up as significantly and as quickly as they have previously. So that's kind of my prediction. I think we're going to see more inventory as we get into spring. Nothing even close to enough to just, crash the market or anything like that. I have no predictions of a crash or a really big downside in appreciation or depreciation, but I do think it's going to get less competitive, hopefully, for home buyers, because it's very tough out there right now. Final thoughts. If you're looking to sell, if you're thinking about selling and you're trying to figure out when the right time is, I would say now. Now's a great time to sell. It'll probably be a great time to sell the rest of the year and probably next year too. I don't think you'll be losing money by waiting, but with the uncertainty in the market, definitely right now we know is a good time, and that's the only thing we know for sure. So if you're selling, I would be considering doing it earlier as opposed to later. So if you're battling in yourself with timing and like when you're moving and hey, should we do it in spring or should we do it in summer? I would definitely probably recommend spring. We can't predict, how different they will be between spring and summer, but we know for sure it's a good time right now. And for buyers, this is a tough game to play. Should you wait? Should you buy now? I think I stick with my original thoughts on most of my videos that you can't really time the market. So I would be trying to buy as soon as possible, because your buying power is actually going to be decreasing significantly as we go through the year, assuming that I'm correct that we have some appreciation. And then at the same time, if interest rates are going up as well, we're going to be decreasing your buying power pretty significantly with those two factors coming in together, making it harder for you to afford the same house that you would buy today later on in the year. So the decision to wait could end up being a financially tough decision for you. You might lose some money doing that. So I think now is a great time to buy. Buying later, it might be less competitive, but you might be paying better or higher prices. So that's kind of my take on the buyer side. If you bought right now, it would be super competitive, and you'd be paying over asking price most likely. And then if you waited and we're looking in summertime, it'd probably be less competitive if I had to guess. It should be less competitive, a little bit more homes to look at, probably a little bit less activity as far as how many offers they're getting. But at the same time, because of the appreciation that I am expecting, you're still gonna pay more for the property in June. So it's kind of more of a personal preference. I would say start now if you find the right property, you're willing to pay for it, fantastic, now's a good time. If you want to take your time, summertime might be a little bit more flexible as far as waiving contingencies and just being less aggressive. But because of the appreciation, their list prices are still going to be pretty high relative to where they are in the beginning of the year because of the appreciation. Hopefully that helps you guys out. Thank you guys for tuning in. Wait till the next monthly market update. Should be a very interesting one to see what March brings us and what the Fed announcement does. And as always, we'll keep you updated on the real estate market. If you have any questions about your local market, your neighborhood statistics, reach out, drop it in the comments, and we will love to connect. Thanks for watching.